This is going to be a big year for tax leaders and a busy one, so let's look at what should be on your agenda over the next 12 months. The general election should be right at the top of the list. We'll no doubt see changes in tax policy in the run-up and after the event if there's a change in government. Tax is always a key dividing line between the political parties, so we can expect announcements from all sides on corporate, indirect and personal taxes. Of course, it's easier to increase taxes on entities that don't vote, which means income tax is unlikely to go up. In fact, we've already seen national insurance rates cut at the recent autumn statement. Instead, I think we'll see tweaks to some of the more complex relief regimes, such as capital allowances and regional incentives within investment and enterprise zones. Governments will always look for tax giveaways ahead of elections, and that will surely influence what Chancellor Jeremy Hunt does in the spring budget. Heads of tax should keep a few things in mind as the election year unfolds. First, media coverage will focus largely on personal taxes, inheritance tax, the non-dom regime, VAT on private school fees and so on. So you'll need to read the small print of the main party manifestos to know what's in the offing for businesses. Second, remember that any tax policies brought in this year could be reversed after the election, particularly if there's a change of administration, so be prepared with a plan B. Third, start modelling and scenario planning now for how potential changes would affect your organisation. For example, what are the employment implications? People on high marginal tax rates may be encouraged out of the workforce or discouraged from rejoining it by tax tapers and lost benefits. What proportion of your workforce might that affect, and what could it mean for your firm's ability to recruit and retain key skills? And finally, make sure that you're part of the conversation. As business leaders, you've got some influence on how tax policy shapes up, so don't wait and react, give the parties your insight into what does and doesn't work. 2024 will be the year that BEPS Pillar 2 gets real for tax teams, as income inclusion and domestic minimum top-up tax rules come into effect in many countries. Much of the planning for Pillar 2 has already been done amongst firms surpassing the €750 million global turnover threshold, especially the larger organisations. Now's the time to begin the data extraction and analysis work and organise your tax function to deliver the enormous compliance requirements. As a tax leader, it's your job to make this happen. You'll need to know what data you need, what you have access to, what's missing, and how to get it in good time to make the required submissions. You'll also need to assess whether your team has the skills that Pillar 2 compliance will demand. If not, will a wider tax transformation be necessary to address the ever-growing demand on the function? The devil will be in the detail when preparing for Pillar 2. There are a lot of technical rules underpinning the broad principles of the regulation, some of which haven't yet been finalised in all countries. Plus, a number of countries are implementing new corporate income tax regimes in response. Others are reforming their incentive regimes to remain attractive after Pillar 2 takes effect. Getting a handle on all of this will be crucial. Yet Pillar 2 won't be the only international tax reform you'll need to address this year. The EU is set to introduce several new directives affecting any business with operations in a member state. You can't take your eye off the EU ball now that we've left the Union. 2023 was undoubtedly the year of generative AI, and tax functions aren't immune to its impact. Tax teams have been experimenting with its groundbreaking capabilities, and this year we'll see it become embedded in the tax technology landscape. I think we'll see customised Gen AI-powered tax solutions go mainstream in 2024. For example, automation of internal transfer pricing and applications to analyse corporate data for errors or tax incentive opportunities. You'll want to work out how to harness these, and you must factor them into your outsourcing and offshoring decisions, and your tax technology and data strategies and roadmaps. All in all, 2024 will be the year when a series of keenly awaited developments become reality. The general election, BEPS Pillar 2, and the reshaping of the tax function through technology and wider transformation. As ever, our tax team is on hand to help you get to grips with the opportunities and the challenges at hand. You can keep up with what's happening in the world of tax on our Future of Tax website and sign up for our newsletter. I wish you all a successful 2024.